Let's go to the entries, the most important part of the intermediate course. And really, please believe me, it took me dozens of hours to find this, and then also another dozens of hours to train this. It needs a lot of practice, but the main thing is to find the pattern which we are looking for in the correct drawn zone. And the first example, on the 1 minute time frame, after the big drop, price came to the demand zone from the higher time frame, and the price was ranging. So my first view could be, oh yes, now the price is on the accumulation phase. Yes, because of the range. And when price is creating the equal lows, which should be read as a support, the next step I am waiting for is the liquidity grab, is to break this support to make a fresh high. And it happened, right? We see the support, break of this, price created the move which looks like the last supply, and it was immediately broken to create the higher high. So I marked then even lower highs were created, supply and break. To make it easier, I drew the short trend line, and what I am looking for is to measure with the 50% retracement the candle which caused the break of the supply and break of this structure. It is very important to measure with the correct candle. It's not easy. It really needs a lot of practice and patience with looking for that. In this example it looks very simple, but then in the next ones I will show you that it's not always so obvious. So I marked here the last small supply. Yes, the supply means the liquidity grab which was broken. Important fact is that the tick volume need to go lower, need to decrease. The tick volume is not so clean to read. Maybe there are some indicators from MQL5's website to make it as bigger as a bars, really bars, not just a thin lines. But the case is to see it is going down. So if I see that the break of structure to create a higher high is with increasing volume, but then price is calming down, so the volume is going down as well, it's for me the sign to look for an entry. The volume needs to be lower as we need to really to see that this is like a calming down. As I like to compare that there's a big train which is waiting on the station to invite people. That we are able to jump into this train very safe because it's staying in one place. It's not running with increasing volume, it's just calming down that we are able to join. And I'm measuring the candle which broke the structure, which broke this last supply in this case, to see the decreasing volume to make me feel safe to join the market. It was dropping market, very bearish move, but I am looking for a buy. It sounds really crazy, but this is how we are trading against the retail traders. Here was a very nice price action because price even above the measured candle create another equal lows, but the volume went down. It was perfect entry with the stop loss should be set below the measured candle. I used the fixed lot size, fixed stop loss as a 3 pips, but in this case could be also 2. This entry was perfect. Let's see another one when price made even new higher high after a higher low. But the question is if he was really break of another supply, if this candle caused this. If you see that yes, the case to avoid this, to leave this setup, is that the volume was going up. It was really running train, the almost catching the momentum. So it was too late here to join the market. You can see the volume definitely went up. So even if the price really shot, make the rally, the entry here was very, very risky. By setting the stop loss below measured candle, like let's say the 3 pips as I'm using, you could be probably kicked out of the trade and maybe be angry that price followed your plan and without you. So the key is to see the volume is going down. We need to see the calm price action. Let's see another example, more difficult. This is also the accumulation phase, also in the demand zone from higher time frame. Very clean support as equal lows, and then the push to the down as liquidity grab. And price created the last supply in here. Yes, this is the base and the push to the downside. First of all, I would draw the trend line like this, like the white line right now. But if you would be looking for the candle which cost something, there's need to be questioned if this supply was really broken. No, because any of these candles broke the structure truly. It was longer, bigger accumulation phase to wait for a really bigger rally. So if price is not breaking the lower high and the supply, the last one which caused this move, I redraw the trend line to mark the higher highs in here, just above this, to see really which candle broke this structure. The importance really to see, to find the one which broke the supply, which created the liquidity grab. It's not only the boss, as the very simple boss, but we need to see the break of last sellers, because these last sellers were truly buyers which were preparing for a true buy, which were trying to lower the price to earn even more, to manipulate the early sellers. So by redrawing this, I now see which candle caused the break of another supply, and here appeared really the true higher high. The structure was broken. We are after accumulation phase, and then it was just looking for a decreasing volume to feel that this is your invitation. And the volume really went down. It was good entry. Later, in this case, we could also find the entry, because another supply was also broken by this one candle. This one caused the break to create another higher high, and not as the previous slide as here, or slide, the chart. Here the volume decreased, but here also went down. But it was later, yes, please avoid this. Always the safe entry is as close to the zone as possible. It was just another broken zone. We are scalpers, we are looking for really the fresh, large orders, not just later to join the market. It was with bigger risk, not always can work. The market is unpredictable. There can be another bigger pullback to create a reaccumulation in this situation, in this example. So it is always safer to join the market as the move just appeared. And another example, this is as a sell setup. Price came to the supply on the higher time frame and also create our pattern as the equal highs as a resistance and push to the up as the liquidity grab. The volume is a bit lower here because this is Asian session. Just want to show you that on every single session this is possible. I'm just trying to avoid the Asian. It's my own preference, but we all here are from different time zones, and some of you may also like to trade Asian. So this is just a small proof that it is working on every single time you want to trade. It's up to you where it's easier for you to find a free time. So price was going up, yes, higher low, higher high, higher low, higher high, and finally went to the supply. So we can say that this is probably the chance of distribution, that sellers are preparing for a sell. They push the price higher to get a better price, and then broke the structure. The last very shiny in this case demand was broken, and we are looking which candle broke the structure and broke the last push to the upside, and it was this one candle. So we need to be sure that the lower low is made and that really price is distributed right now. And we need to see the decreasing volume to feel safe to join the market. Even better that here it is a compression move. You can see very small compression, as this is the Asian session, and push to the up and directly back. Yes, these two candles are like if we can make it as a one candle, it is like one big rejection from the 50% of this area. But please also remember that the 50% is not kind of 100% level of rejection. This is just an average. We don't see the real volume now. We don't see the footprint chart. This is just my observation after dozens of hours of tests, and I can understand that this is the hardest part, because without the footprint, without the real volume, it can be like going blind on charts. But if you can measure the core candle which really broke the demand, the last demand on distribution phase or last supply on accumulation phase, just wait for decreasing volume. Do not jump too late as reaccumulation. This is more for advanced traders or redistribution phase. It's always safer to catch the top of the move. Please do not try this at first on the live market. The best way is to backtest this or to use the pennies or demo. I don't prefer demo account just because of me. I love to feel the pain by losing some money, but this is up to you. Maybe my advice could be try this with really 0.01 lot size, the lowest one, because 3 pips stop loss, these are really pennies, and to try this, very important. Or just to like a paper trade, to rewind the charts and to look for every single supply and demand from higher time frame, to look for only these two patterns like compression and equal highs equal lows, to try to measure the correct candle and to see if the rejection is really with lower volume. The lower volume is our invitation. Originally this video on the previous course took over half hour. I believe that now the 15-16 minutes is enough to not make you confused. This is how I see this. Always the liquidity grab is like creating the false zone to invite the opposite traders, the opposite side of market to join them. And we need to see the break of the trend line, break of the zone, and then decreasing volume on the candle which caused this break. So please be not be greedy, yes, not measure everything what is possible, just the one. And I need to admit here that this is trading without real volume, yes, without the map. So it is not so easy, but it's possible. Yes, I created my account just by trading this way, but it needs a lot of practice, as everything we are doing in our life. No one can read as a 3-year-old kid. No one can run as a 2-year-old kid. We need always few years of practicing something to be good in this. So I'm showing you my footprint, how I'm doing this, not footprint, blueprint, and it's just a big shortcut for you how to join the market with very tight stop loss. This is my way. I spent a lot of hours to find this, and when you will finish this course, this part of the course, the intermediate one, then you will see that the real volume is a big advantage to find these entries easier. So you are one step closer to the map where to join the market, but please at first be as good as possible in this way of trading before you will download the all new advanced tools. If you will be master in this way of trading, it will be way easier for you to apply the new tools. So please just try, test, and feel strong in this.